Hello traders, in this video I want to speak about EURUSD and I will make a technical analysis on this pair starting from the monthly time frame. So we all know that this week we have FOMC minutes and we know that we are likely going to see a rate cut for the first time since last year. So when we look at the market from the technical standpoint, what we can clearly see is that even though the overall trend of EURUSD has been more of bearish, if we historically look at the market from higher time frame perspective and we are taking into consideration the movement of price for over a decade now, we can see that, oh yeah, it has been more of what? Bearish. But right now we have a point of interest in this market. We have a point of interest to be at this price level here. So we have this price to be our point of interest. And why did I choose this level as point of interest? Clearly we can see that from that level, from that zone, we previously had a very aggressive downward move, and after we had a rebound around this price here, we have seen a complete retracement back to that same zone. So that level is a point of interest because that is a zone that will decide if the bearish move is going to continue or we've completely had a trend reversal, meaning that we will have more bullish price action development away from that current price. Okay, so that is our point of interest to put a close watch at. So if we look at the market from the recent trend here that have developed just in a couple of months now, we see that it is strongly bullish, and out of this strong bullish move here, we've only had one different candle, which is the one I highlighted here. That means we've just had a slight retracement, and right now price is back to the top of that bearish candle, or at the open price of that bearish candle. So that is some couple of signs that we could be seeing more bullish price action, meaning this could be a reversal. We have this low, we have a higher low. So logically, what do we expect the market to make? A high that would clearly take off this previous price here. So from the monthly time frame, we've picked our point of interest to observe what the market is likely going to do around that level. So let's quickly check the lower time frame, which is the weekly. Here from the weekly perspective, you can see that previously we were having a bearish trend in this market, and at this level we had a complete trend reversal here. Okay, so after we had the trend reversal, we started having series of high, higher low, higher high, higher low. We have a high, we have a higher low too. So we've been having a bullish weekly chart. Okay, so if the bullish weekly chart is to continue, that means we have to see a break above this our point of interest price, which we've already marked from the monthly time frame. Also, we can see the couple of weak rejection from candles that is also showing bullish impulse around that level. What it simply means is that anytime price tends to drop, they usually buy it up. Anytime price tends to drop, they buy it up. So that is a strong support level around this level. And also, if we check pattern, we can see that the market is forming a kind of symmetric pattern, which we all know about symmetric pattern, that anytime price is making such pattern like this, there's usually a high tendency for price to break to the upside, especially if it is coming from a trend. So as we already know that price is coming from a bullish trend from the weekly chart, there is a high probability that we are going to see a break above the resistance line. Okay, so the weekly time frame also seems quite bullish. So let's now check the daily. Here from the daily time frame, the price action that is being displayed here is very, very clear. This is the trend that we already identified from the weekly. So this is part of the bullish trend. And another thing we can notice from the daily time frame here is that the momentum slowed down. Okay, so the bullish trend got broken to the downside. So if we observe the trend line that I connected prices, I connected this price reason because from here all this move to the upside was created. I also connected this price because from here all this move to the upside was also created, which was able to make a difference to the upside. So I connected the two price and it is giving me this pretty nice trend. And we see that in a couple of days now, price has been trading in a choppy or in a consolidation mode. So it has been ranging. Market is quiet, waiting for major macroeconomic report to be released for the next price action to take place. So from the daily time frame, we've been seeing a consolidation, which is a sign that we are likely going to see a breakout. Okay, so inside of the consolidation level, the institutional traders are likely to be accumulating their positions, waiting for the next market move. All right, so here we can see a clear top. We can see the first high, we can see the second high, we see a break of structure to the downside, we see a low, and price is ranging here. So what's the next price action that we are likely going to see in the market? Is this low a higher low? That's the question that is running in the mind of traders. So if that's to be a higher low, then logically we are going to see a higher high. That means there is a continuation in trend. So the economic report we have for this week, we have retail sales coming up from the United States. We have ZEW Economic Sentiment Index, and we have the almighty Fed press conference, which is the FOMC. Okay, and in this Fed interest rate decision, the previous report was 4.25. The forecast for this coming FOMC event is 4.25. All right, so the actual is yet to be announced. So if they cut the rate, then we are going to have a positive response on the chart, which is a breakout of the resistance level. So this is the analysis on EURUSD. So after the news, we will see how the market participant will react to it, and we will now make trading decision on this pair.